Kia ora. With the emergence of new technology and cryptocurrencies and the declining use of physical cash, discussions around introducing a central bank digital dollar, a CBDC, have gained traction. A CBDC is a digital money issued by a central bank that represents a legal claim on that central bank. There are various advantages of a CBDC, including reduced transaction times and costs and implementing monetary policy more effectively. However, the disadvantages, which include disruption to the private banking sector and operational risks, are of grave concern. As these risks have not been adequately navigated, we are against introducing a digital dollar in New Zealand at the moment. It is essential to redress these concerns, as realization of any of them will result in decreased public trust in the CBDC and the Reserve Bank, and therefore threaten the stability of our financial system.
The introduction of CBDC will not have significant benefits in New Zealand's increasingly cashless society. The Cash Used in New Zealand Survey 2020 found that most New Zealanders use electronic payment methods such as EFTPOS and PayWave as their main way of paying. Therefore, the convenience factor already exists with electronic payments forms facilitating fast transactions. There's no denying that the issue of CBDC could change the financial system in a big way and bring many benefits, but these benefits could also be realized in other ways. New Zealand's banking sector is small and as such, control and collection of information can be more easily managed when compared to larger banking sectors overseas.
Additionally, the CBDC should not be implemented in a hastily manner due to potential disruption to the private banking sector. Commercial banks are already facing increased competition for deposit funding, and the CBDC represents another form of competition. Due to the low credit nature of the central bank money, there's a risk that there will be high demand for the CBDC, resulting in people pulling their money out of banks and other investments and ploughing it into the CBDC. Also, bank runs are likely to increase during periods of economic crises. If banks start losing lots of deposits to digital cash, this could seriously disrupt their business model and severely threaten the stability of the banking sector.
80% of central banks are actively researching CBDCs, running public forums and launching pilot programs. The RBNZ should follow suit so that they can be ready to deploy a CBDC in the foreseeable future. Digital currency will be sought after by future New Zealanders, and the RBNZ must be ready to step in to fill this demand. Failure to do so can allow privately run digital currencies to create a foothold, and displacing these currencies could be messy and unpopular. It would be bad for the central bank to contend with private digital currencies, because it would mean that a portion of New Zealand's economy would be privately run, with little regulatory oversight and the inability to track targets set by the government. Agency problems don't stop at banks. The lack of a robust regulatory framework for digital currencies means that profit-driven custodians can act outside of the interest of currency users. Failing to fill a market void for digital currencies would be foregoing the opportunity to gain access to a myriad of new powerful precision tools for managing monetary and fiscal policy.
From a fiscal policy standpoint, CBDC is able to assist the government on the distribution of welfare directly to the public without the need of intermediaries. For example, during the COVID-19 pandemic, this function would allow the government to directly distribute benefits, such as the wage subsidy, to struggling businesses without delay. From a monetary policy standpoint, an interest-bearing CBDC could be used as a monetary policy tool to directly transmit policy rates and regulation to CBDC holders and maintain monetary policy effectiveness within the economy. In conclusion, there are benefits associated with the introduction of a CBDC. However, without information and regulation about the demand, production, and distribution of the CBDC, along with a sound design plan, introducing the CBDC could have a detrimental impact on the financial system.